All right, welcome back. It's your boy Michel Valbrun, aka Money Making Mitch, and welcome to this module of business deductions, mastering small business taxes, part one. For the next couple of modules, we are going to talk about mastering business taxes, how to lower that tax bill, how to save you money and get more of that money. Like I said in the first module, back into that business so you can create and continue to build up that money machine. So let's get straight into it. Disclaimer: as I mentioned, this training is for informational purposes only. It does not constitute legal or professional advice, and you are encouraged to consult with a licensed tax professional, enrolled agent, or CPA if you have specific questions relating to any of the topics covered in this presentation. All right, so now that we got that out of the way, what are business deductions? Excuse me. So business deduction, and I'm going to tell you straight from the IRS's code, which is section 162A, and allows for a deduction for all ordinary and necessary, keywords there, paid or incurred during a taxable year in carrying on any trade or business. I'm going to talk more about that in a little bit. So the key here is you want to be a business owner every day. And in fact, you are a business owner every day. I know you have a business and you're like, yeah, duh. I mean, what? That's common sense. I mean, I know that. Yeah, I get it. But it goes even deeper than that. Yes, you own a business. Yes, you have a registered business, but you want to make sure that every move that you make, as much as possible, it is going to be tied back to your business in some ways. So that's why I said every day you're a business. And what do I mean by that? Every time you're out and about doing anything, and I mean every single time, you need to be talking about that business. All right, I'm going to give you an example, a very common example here. Boom. So a lot of people like to drink coffee. They love their coffee, right? And on the left side, you can see that's an everyday expense. Nah, 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 nah. We are off that now. Next time you're doing coffee, you want to make sure you have coffee with someone and you turn that into a business meeting. You guys are talking about business. And then you can write that off for tax purposes. So you want to stop entertaining people and you want to start having more business meetings. So you don't want to just have people come over your house, or you don't want to just go to restaurants and do all these things. Not every time that you're doing something, it needs to be tied back to the business. You need to be making it about business, all right? Because that's what the government wants you to do in order for you to write that off. If not, then it's just gonna be personal expense. You might as well just use your personal card and go ahead and use that money, okay? Because you can't use it to write it off. You want to make sure it's about business. All right, so an example we have here, for donations. All right, a lot of people like to make write-offs for donations, but the real way to do that, the real big power play there when it comes to taxes, is instead of donating money to, like, say, a school, for example, you should probably buy marketing material instead. So make it a marketing expense instead of a donation. So you want to buy product with your logo on it. All right. So if you want to give pens to the school, if you want to give whatever school material that you can give them, erasers, whatever those things are, you want to make sure you put your logo on it, and that'll serve as a marketing expense. So it will be a marketing instead of donation, and you do it in the same name of your company, and that's going to allow you to write even more money from your taxes. So big tax move right there. Next, you want to be the biggest cheerleader for your company. So you want to make sure that you're always, let me not say always, because I don't want you to get in the habit of just spending money for your business, a ton of money for your business. But you want to make sure that when you're making moves, you're spending, you make it tied back to your business. So let's say you want to buy a car plate. You want to put your business on there. Let's say you buy a jacket or whatever. I mean, you can make it customized for your business. So every time that you need something, see how you can tie it back to the business and make it a marketing or a promotion kind of device there, right? So everything you do on an ordinary day basis becomes a tax write-off if you live this way. So you always want to link activities for your business and link it to the pursuit of money. And sorry, I spelled it. Looks like I spelled activities wrong there. My bad. But you always want to link activities there always for your business, right? And you want to pursue and you want to link it to the pursuit of income. Very important. And these are some business deductions that the government and the IRS pay special attention to, okay? So I'm going to quickly walk through this and talk about them because you want to make sure that when you're doing these, you're making sure that you're on point when it comes to this. So for meals and entertainment, if you're conducting a business meeting in a cafe or a restaurant, which is, it's a great option. You just want to make sure that you document it very well. So on the back of that receipt, like I said, you want to make sure you're holding on to your receipts, you're keeping those receipts. You want to just write a note and record who attended that business meeting that you had and the purpose of the meal or the outing. So you want to write that down on the receipt on the back, just so you remember it. Out of business travel, right? The IRS and CPAs are very wary of people claiming personal activities as business expenses. All right, people do it all the time, very common, and it can put you at risk of getting audited. So you don't want to be that person. So you want to make sure that you are making sure that your receipts, maintaining those receipts. You're keeping a business paper trail of the business's activities that you did while you're away. Okay, so let's say that you do go to a trip, right? Let's say you happen to travel for a wedding. You want to make sure that when you travel, you have a business meeting during that time, and you want to make sure that's documented somewhere. You want to document the meeting, maybe the agenda, who was at the meeting, what did you guys talk about. Just make sure that's all documented very well to order to support that business travel, right? Vehicle related expenses, so you want to record when, where, and why you used your vehicle for business, and then apply the percentage of the use to the vehicle related to the percentage. So if you're going out, driving into the city, let's say that you have to drive a couple of minutes out to get somewhere, you want to write down what portion of that was related to business, what portion of that was related to personal. Let's say that you were meeting an individual maybe 50 miles away, right? So you're driving, but on the way there, you probably stop at the mall. Okay, so you don't want to allocate that portion of the trip to the business unless you are going to the mall for business. But if you're not, you want to not allocate that portion of it and then write down the portion of the travel that's related to the business. So very important there. Home office receipts, very similar to the vehicle expenses. You just want to calculate what percentage of your home is used as a business and then apply that percentage to home related expenses. Very, very important there as well. So employee everyday deductions. These are going to be for some of my people who are still W-2 earners and are still getting W-2s. These are some things that you can do to reduce your tax liability as well. So paying taxes is inevitable, but finding extra tax deductions is inevitable, right? It's possible. And if you are a salary employee, you may be surprised to learn that there's deductions that you can take off related to your job, right? So before getting into the actual deductions, we need to understand what the IRS considers unreimbursed employee expenses. And these are going to be expenses your expenses must have been required for you to carry out your job for which you are hired, and you must be what the IRS calls ordinary and necessary. What that means is that the expenses that you're allowed to deduct as an employee, they had to be absolutely required for you to do your job, and they're ordinary and necessary. So nothing outrageous or weird that doesn't make sense for your business. So essentially what that means is the item or service is common and accepted in your line of work and is appropriate and helpful for your job. So to claim these, you must itemize these items on what they call a Schedule A, and your unreimbursed business expenses must total more than 2% of your adjusted gross income. All right, your AGI is what we call it. So it has to be more than 2% of your adjusted gross income, whatever that comes out to at the end of the year. So let's say, for example, if you have an AGI of $40,000, your expenses need to be more than $800 before you can begin claiming any deductions. So 2% of your gross income. All right. So possible business deduction categories. give you a better idea of what type of expenses might be qualified for unreimbursed job-related expenses, here's a brief overview. And again, these are only qualified if your employer does not already reimburse you. So let me make that very clear. Some of the things I'm going to mention to you, your employer may give you these things, they may pay for these things. If they are not paying you for these things, then these are what's considered unreimbursed job-related expenses. So legal fees, right? Licenses or regulatory fees used to groups, unions, and local trade groups. Excuse me. Education related to your job or work clothes, uniform, and possible upkeep cost. Subscriptions to professional journals, magazines, and all that other good stuff related to your job. So if your company is not already providing these things or reimbursing you when you spend money on them, then you are able to write them off for your tax purposes. Medical examinations required by the employer, such as, let's say you have to do a drug test, anything like that. Depreciation on technology required to do your job. A home office, or part of your home used regularly and exclusively for work. So let's say you have an office in the house, you can allocate a portion of all expenses, even your mortgage, all those good things, to that office. So if it occupies like 20% or 10% of the house, you can allocate that to write off. And unfortunately, commuting expenses to get to and from your job are not deductible. But if you need to use your vehicle for work-related activities such as meetings, conferences, trade shows, other travel, you may be able to deduct those actual expenses required for the trip, or use the IRS standard mileage. So in layman's terms, all that means is that if let's say that you're commuting back and forth to work, and it's 10 miles, okay, but let's say part of that time you have to travel to go to something related to work. That portion of the travel, which is over and beyond your normal commute, that's what's going to be reimbursable for you, okay? And then you're able to use what the IRS's standard mileage deduction is for that. Certain casualty and theft losses could be deductible. In most cases, the rule applies to damage or stolen property you held for investment. This may include property such as stocks, bonds, and works of art. Gambling losses up to the total of your winnings. So let's say that you won $1,000, but you lost $5,000. You can only write off the $1,000. Okay, so you can just net it out to zero, but you can't go over and beyond that. Losses from Ponzi schemes, those kind of investment types of strategies, those can potentially be written off too. And again, you want to make sure you're working with a professional on these as well. So tracking technology. So you may feel like, okay, this is a lot to manage, a lot to keep track of. What's an easy way to manage my mileage? What is an easy way to track my expenses? And here's some technology that you could use. So here's just some apps that you could use. MileIQ is a popular one. Some of these ones here are very, very good that you can use in order to track mileage. So very, very important that you look into these. I use MileIQ. I have some friends who've had some experience with these other ones. MileIQ is super easy to use. It's automatic too. It does drain a lot of battery, but it automatically records your travel time. Expense tracking, on the left is Concur. QuickBooks, of course, you can use to manage your expenses as well. And then for your receipts, you can use Shoebox. Very, very awesome tool to manage your receipts. Okay, so that concludes the module. My time is up, as you can see, and time is money, and I'm not trying to take up too much of your time. Hope you enjoyed it, and I will look forward to seeing you in the next module. So take care and bye.